The criticism of the previous version of the cap was that Russia was still able to put barrels onto the market and fund its war machine by selling this oil. Do you think this floating price cap, this new mechanism, will ultimately have a real impact on Russia's ability to fund its war? And is this more of a more credible mechanism, or is it just harder to enforce?
It is a little bit more credible in a sense that instead of having this fixed cap of $60 and in a low oil price environment anyway, when prices were not, Brent prices, for example, were not trading far from 60 to 65, the impact on the revenues generated by Russia from selling its oil and gas was limited. But so far, if you put it like 15%, which makes it more on a flexible sliding scale with prices, that makes it more effective. That said, the Russian economy, it's not, first of all, we have to be clear, the sanctions are not really to stop barrels coming to the market. This is not a scenario that the West would like to see, because that would put upward pressure on prices. It is primarily to reduce the revenues generated to the Russian government, which until today generates around 30% of its revenues from the sale of oil and gas. And they're already feeling the squeeze, because if you look at the first 5 months of this year, they saw a significant drop in revenues of around 14% year on year. Now, when you look at the Russian economy, I know lots of commentators have been making extreme comments on the Russian economy. Either they say it is about on the verge of collapsing, or it is resilient. I would say it is neither. It is not collapsing, but it's not growing either. So if you look at the model that the Russian economy is running on today, it is a war economy. It is based on spending on military in addition to support from countries such as North Korea and China. But this model is not a model for survival. It's a model for survival. It's not a model for long-term growth. And more importantly, the impact is longer term. And this, when you think about the impact of sanctions, they are not going to stop Russia from producing today or selling oil and gas and still generating revenues. But the impact is really on long-term prospects for the Russian economy to stop similar aggressions as the one we saw in 2022.
And Carole, the other criticism being leveled towards this floating price cap is that it may be ineffective unless the United States actually stands behind it and backs it up with additional sanctions on the buyers of Russian oil, like China and India, for example. Would you agree?
Absolutely. I mean, when you look at the market reaction today, you can sense that the market observers and analysts are still working out how effective that new cap, which is going to generate around $45 to $50 a barrel for oil price for Russian oil, assuming Brent is where it is today. Now, that is not insignificant, but the main question is how effective these new sanctions, this new round of sanction is going to be compared to the predecessor 17 rounds. And this is where the doubts are there, because we don't feel that the market is being rattled by the new round of sanctions. Even if you look at the products for oil, such as diesel, yes, there might be some tightening there. But really, when you take oil and then you blend it in refineries and you process it and then you trade it, it becomes a murky business. So the impact is going to continue to be limited. However, the real game changer here that's going to change the whole, what we saw in the last 3 years, is whether the U.S. comes on board, whether President Trump delivers on his threats of imposing 100% tariffs not only on Russia but on buyers of sanctioned Russian oil. That will, I think, would send ripples across the oil market, and we're going to feel much more significant impact on oil markets than we see today with the announcements of the EU sanctions alone.
So, Carole, expand on that for me, because this is something I've also been following really closely. I spoke with India's petroleum minister about this just a couple of weeks ago at the OPEC seminar in Vienna, and really pressed this point and questioned just what type of impact fresh sanctions on India would have if the US was really trying to drill down and try and bring an end to this war. Taking a look at the numbers here, China's imports of Russian oil have ticked down, but there's still a steady stream of about 2 million barrels per day flowing. At the same time, India is still consistently importing Russian crude as well. Now, the argument that both of these countries make is that they need as much energy as they can possibly get. And of course, within BRICS, there's also the geopolitical alliance as well with Russia, which is perhaps having an impact too. But if the US did actually move ahead with sanctions on the buyers of Russian crude, what impact do you think it would have on the likes of China and India? Would it be material or negligible?
I would say the bigger impact is going to be on India because India is an important exporter of diesel to the European Union. And in that respect, if you look at the numbers, it generates significant commercial and economic benefits to many Indian companies and economy. But there is also the strategic impact because India is a much closer ally to the West than we have with China. China continues with a standoff against the West, particularly the US, and we saw with their dealing in Iran because they continue to purchase Iranian oil irrespective. However, for India, it's a more strategic long-term question, and I think India will have to give in at some point to the threats from coming particularly from the US. They have not been very responsive to those from the EU, but I think if the US comes on board, India has to think twice about strategic alliances, not only in terms of commercial interests. So this is where I would keep my eyes on. And India has to find other sources of oil to refine at a reasonable price. That said, with sanctions, when you don't have everybody on board, it's really like a sponge where one door closes, another door opens, and it's not a transparent business. So there is the other dimension that, yes, maybe on purpose, maybe on the surface, the likes of Indians are going to follow the sanctions, but we don't know what happens behind closed door in the opaque, dark market of oil trade globally.